Welcome back to Financial Freedom FX. In this video, we are going to perform a complete and deeply detailed technical analysis of the AUD-USD pair on the monthly time frame. We'll break down every element of this chart, from candlestick patterns to trend lines, support and resistance levels, and the overall market structure. By the end of this video, you will have a clear understanding of where the Australian dollar stands against the US dollar and what scenarios traders should watch out for in the coming months. So make sure to watch till the very end because this analysis is packed with valuable insights that could help you make smarter trading decisions. Looking at the chart, the current price of AUD-USD is 0.65660, and the overall structure shows that the pair is trading within a wide horizontal range. The first key observation is the major resistance level at 0.68770, marked by the upper white line and highlighted with a purple rectangle. This level has repeatedly acted as a strong supply zone. Every time the price has approached this area, sellers have stepped in, pushing the pair back down. You can see multiple candlesticks here with long upper wicks, which are clear signs of rejection and selling pressure. This tells us that big players in the market are likely taking profit or opening new short positions when the price moves into this zone. On the flip side, the major support zone lies between 0.61697 and 0.59270, with an absolute low near 0.55086. This region is where buyers have historically shown strong interest, creating bullish reversal patterns. Notice how, when the price reached near 0.55 earlier in 2025, it formed a large bullish candle with a long lower wick, signaling a strong rejection of lower prices. This candle alone shows that buyers were aggressively absorbing the selling pressure, preventing further declines. One of the most important things to note on this chart is the transition of candlestick behavior. Back in 2022 and 2023, we saw a sequence of strong red bearish candles with lower highs and lower closes, reflecting a dominant bearish trend. However, starting in early 2025, the momentum shifted. We started to see green bullish candles taking control, with each candle closing higher than the previous one. This is a classic sign of market reversal or accumulation, where the market is no longer making new lows, but instead is consolidating and preparing for a possible upward move. A particularly notable pattern can be observed around the 0.60 zone, where a bullish engulfing candle formed. This means the green candle completely covered the body of the previous red candle, showing a sudden surge of buying interest. Such patterns are highly significant on higher time frames, like the monthly chart, because they often signal longer-term shifts in market sentiment. From a trend line perspective, if we draw a line connecting the lower highs since mid-2021, we can see that the overall structure was clearly bearish. The price was respecting this descending trend line, creating a series of lower highs and lower lows. But now, for the first time in almost 2 years, the price is challenging this trend line. This is an early indication that the downtrend may be weakening. If the price breaks and closes above this trend line, along with the 0.68770 resistance, we could see the beginning of a long-term bullish phase. On the other hand, the horizontal zones are also crucial here. The market is currently stuck between 0.61697 support and 0.68770 resistance. This is a consolidation range, and whichever direction the market breaks from this range will likely set the tone for the next big move. If the monthly candle manages to close above 0.68770, this breakout could open the path towards 0.70 and even 0.72 in the coming months. This would indicate that buyers are fully in control. On the downside, failure to break above 0.68770 and the formation of a rejection candle, such as a shooting star or bearish engulfing pattern, could lead to a retest of the 0.61697 and 0.59270 supports. In the worst-case scenario, if 0.59270 breaks, the next test could be near the 0.55 lows again. For swing traders, this is the perfect time to watch how the price reacts near the 0.65660 to 0.68770 zone. Waiting for confirmation candles like pin bars, engulfing patterns, or strong breakout candles is key before taking positions. Long-term traders might look for buying opportunities near 0.61697 with tight stop losses, while shorting near the 0.68770 resistance could also be a strategy if bearish rejection patterns form. Let's take a close look at the AUD/USD weekly chart, where we can clearly see the market structure, candlestick behavior, and the major price levels that define this pair's movement. The current price is trading around 0.65660, and this chart shows us more detailed price action compared to the monthly time frame, giving us a better view of how buyers and sellers have been battling in recent weeks. The first important observation is the major resistance zone at 0.68709, which is marked by the upper purple rectangle. This level has been tested multiple times over the past year, but each time, strong selling pressure has prevented the price from moving higher. You can notice how every time the price reached near this zone, long upper wicks and strong bearish candles were formed, which is a sign that institutional sellers are active here. The market treats this area as a supply zone where short sellers dominate and push the price downward. Until this resistance is broken with a strong weekly close above 0.68709, we can't expect a confirmed shift to a bullish long-term trend. On the downside, the most important support level is around 0.61844, which is highlighted by the lower purple rectangle. This zone has been acting as a demand area where buyers have consistently stepped in to push the price higher. Recently, when the price fell below 0.63, we saw a powerful rejection and a sharp bullish reversal from this support, resulting in a series of strong green weekly candles. This reaction shows that buyers are determined to defend this level and could continue to do so if price comes down again. In fact, this level is the foundation of the current recovery phase we are seeing now. If we observe the candlestick behavior, the recent weeks have been dominated by bullish price action. We can see a series of higher highs and higher lows forming after the strong rebound from 0.61844. This is a sign of a short-term bullish trend building within the larger range. The strong bullish candles, especially those with minimal wicks, indicate aggressive buying and momentum in favor of the bulls. However, the price is still facing resistance as it approaches 0.6600 to 0.6700 levels, which means the next few candles will determine whether this bullish momentum continues towards 0.68709 or fades out. The overall trend structure on this weekly chart still shows that the market has been in a broad downtrend since 2022, with lower highs and lower lows dominating the price action. But the current movement is testing this structure. If price can continue to form higher highs and successfully break the 0.68709 resistance, it would confirm a trend reversal on the weekly time frame. Otherwise, any rejection near this resistance could bring the price back toward the mid-range support, around 0.6400, and possibly retest 0.61844. Another interesting factor on this chart is how the market consolidates before big moves. Look at the areas near 0.63. We can see multiple candles with small bodies and long wicks, indicating indecision and accumulation by bigger players. These zones often act as launch pads for the next major trend. Right now, the market is showing strength, but traders need to watch how the weekly candle closes near 0.6600 and above. A strong breakout candle with a body closing above 0.6700 would confirm that the bulls are ready to attack the 0.68709 resistance next. For traders, this weekly chart gives us two clear strategies. Bullish traders can look for buying opportunities on dips towards 0.6400 to 0.6300, placing stop losses below 0.61844 to stay protected if the trend fails. On the other hand, bearish traders can wait for rejection patterns, like pin bars or bearish engulfing candles, near the 0.68709 resistance to enter short positions targeting mid-range supports. It's crucial to wait for confirmation candles on the weekly close to avoid false breakouts. Looking at this daily chart of AUD USD, we can see a detailed view of how price action has developed in the short term, with every minor trend and reversal becoming visible. The current price is around 0.65660, and the chart shows a strong structural shift from a bearish trend to a bullish phase over the past several months. Earlier, from late 2024 to early 2025, the market was in a clear downtrend, creating a series of lower highs, LH, and lower lows, LL, which can be clearly seen on the chart. Each time the price attempted to rally, it failed to break the previous high, confirming the strength of sellers. The aggressive bearish move finally found strong support near the 0.61844 zone, which was a key demand area highlighted by the purple rectangle. From that point onward, the market started forming higher highs, HH, and higher lows, HL, signaling a trend reversal. This shift in structure is crucial because it shows that buyers have stepped in with enough strength to break the previous lower highs and establish an upward trend. We can see this change starting around March 2025, when price first formed a higher high compared to the previous swing high, confirming the end of the bearish momentum. After this, a series of bullish pushes, with retracements forming higher lows, led to a consistent climb toward the 0.65660 zone. The daily candles during this bullish phase are significant. Many of the green candles are strong-bodied, suggesting aggressive buying without much hesitation. The pullbacks, marked by the red candles, are relatively smaller and fail to break below key HL levels. This indicates a healthy bullish structure, with each correction being used as a buying opportunity by traders. The dotted green and red markers on the chart confirm this step-by-step shift from bearish to bullish. Currently, price is trading close to the upper boundary of its range, with the major resistance at 0.68709 looming above. This area is critical because it has acted as a strong rejection zone in the past, and buyers will need a clear breakout above it for the bullish trend to continue strongly towards 0.6900 and possibly 0.69426. Until that happens, we can expect price to face some resistance around the 0.6600 to 0.6650 levels, which we are already seeing with recent rejection candles. The support levels on the daily chart are equally important. The area between 0.6400 and 0.6350 is acting as a short-term demand zone, while the broader zone of 0.61844 remains the long-term critical support. If price fails to hold above the HL markers, we might see a pullback toward these supports. However, as long as the price structure continues to create higher highs and higher lows, the bullish trend will remain intact. Another observation is the presence of strong consolidation phases, especially between April and May 2025. During this time, the market moved sideways before breaking upward, indicating accumulation by buyers. This kind of price behavior often precedes larger bullish moves, which is exactly what we saw in June and July, when the price climbed sharply toward the current levels. For traders, the best approach on the daily time frame is to watch for breakout confirmations above recent highs around 0.6600 to 0.6650. A strong daily close above this level could open the way to test 0.68709. On the other hand, any rejection pattern such as a bearish engulfing or shooting star near this resistance might signal a short-term correction, where price could retrace to 0.6450 or even 0.6350 before attempting another push upward. In short, the daily chart of AUD USD shows a strong bullish recovery from the lows of early 2025, with price structure shifting from a dominant bearish phase to a series of higher highs and higher lows. The key levels to watch remain 0.6600 to 0.6650 on the upside for a breakout, and 0.6400 to 0.6350 on the downside as a short-term support. Traders need to stay patient and wait for clear signals at these zones to avoid false breakouts. Now, as we wrap up this analysis, let's look at the 4-hour chart of AUD USD, which gives us the most recent and detailed picture of price action. Currently, the price is trading around 0.65660, and this time frame shows how intraday trends and shorter-term market moves are forming around the key levels identified in higher time frames. The chart highlights how the pair has been steadily climbing from the lows near 0.6250 earlier this year, with a clear series of higher highs and higher lows forming. This structure confirms that the short-term trend remains bullish, but the market is now approaching key resistance levels that could decide the next immediate move. We can see that the first major resistance on this chart is around 0.66883, followed by the critical zone of 0.68709, which we discussed in the weekly and daily analyses. These levels are not only visible here, but have repeatedly acted as rejection points on the larger timeframes. In recent sessions, the price made a sharp bullish push, but near the 0.6600 to 0.6650 range, we can already see a slight hesitation with wicks forming on the recent 4-hour candles, indicating that sellers are starting to take some control. If price fails to break this zone decisively, we could see a short-term pullback towards 0.6500 or even the 0.6450 support level before another attempt higher. On the downside, the most immediate support zones are at 0.6450 and 0.6350, which are marked on the chart with horizontal lines. These areas have recently acted as strong demand zones where price rebounded multiple times. Notice how each time price dipped into these zones, buyers stepped in aggressively, creating strong bullish candles and pushing the pair upward again. This suggests that buyers are still protecting these levels, making them ideal zones for swing traders to watch. The 4-hour chart also tells us a lot about momentum. The overall bullish run has been characterized by strong impulsive candles, followed by smaller consolidation phases, which is a sign of healthy price movement. However, traders must remain cautious around 0.6600 to 0.6688, as this region could trigger short-term profit-taking or even a minor correction before the market attempts another breakout. As we end this analysis, it's important to remember how all the time frames, monthly, weekly, daily, and now the 4-hour chart connect to give us a complete story. While the long-term structure shows a recovery and potential bullish reversal, the short-term charts like this one highlight the immediate battle between buyers and sellers. If we see a clean 4-hour breakout above 0.6688 with strong bullish momentum, the road towards 0.6870 could open up quickly. On the other hand, Any failure or rejection here might bring the price back into the 0.6450 to 0.650 zone for another retest. So this concludes our full multi-time frame analysis of AUD/USD. We've gone from the big picture on the monthly chart down through the weekly and daily views and finally zoomed into the 4-hour chart to see the most recent price action. This top-down approach gives traders the best possible perspective to plan trades with confidence. If you found this breakdown helpful, don't forget to like this video, subscribe to Financial Freedom FX and share your thoughts in the comments. Where do you think AUD/USD is headed next? Will we break above 0.6688 and head towards 0.6870? Or are we due for a pullback? Let me know below.